Oil is pumping, dividends are flowing, and Canadian energy stocks are still some of the strongest performers heading into 2026. But instead of betting everything on a single company, what if you could own the entire sector in one simple ETF? Today, I'm breaking down the top Canadian energy ETFs you need to know right now. Hey everyone, welcome back to the channel. If you're looking to grow your money through Canadian oil and gas without picking individual stocks, this video is for you. Today, we're diving into the most powerful Canadian energy ETFs that give you instant exposure to oil producers, pipelines, and the energy infrastructure powering the country. Let's get into it. First up is XEG, the OG of Canadian energy ETFs. This fund tracks the entire TSX energy sector, meaning you get all the heavy hitters: Canadian Natural Resources, Suncor, Cenovus, Imperial Oil, Tourmaline. This is perfect if you just want broad exposure to oil and gas in a single click. It's liquid, it's simple, and it gives you the full sector. Investors like its stability, diversification, and long-term performance, and it's best for beginners and long-term ETF holders. 2. HXE. HXE tracks the same index as XEG, but at a slightly lower cost. That means more of your money stays invested, not eaten up by fees. It's basically the smart shopper version of XEG. If you want the same exposure but cheaper, this one deserves a serious look. Investors like its low cost and identical exposure to XEG, and it's best for fee-conscious long-term investors. Number 3, ZO. Now this one is different, in a good way. ZO gives every company in the ETF equal weight, not just the big guys. So instead of CNQ and Suncor dominating your portfolio, smaller names get the same importance. This reduces concentration risk and gives you a more balanced exposure across the whole energy ecosystem. Why investors like it? Safer distribution, more diversification. And this is best for investors who don't want their ETF dominated by 2-3 giants. Number 4, NRGY. This ETF is similar to ZO, equal weight, but with an extra bonus: monthly distributions. That's right, if you're building a passive income portfolio, NRGY pays you every single month. Equal weight plus monthly cash flow is investor favorite. Investors like its monthly payouts and balance weighting, and this is best for dividend investors and TFSA income portfolios. 5. PPLN. PPLN is the ETF for those who want energy exposure but hate volatility. Instead of oil producers, this one focuses on pipelines and midstream companies: Enbridge, TC Energy, and Pembina Pipeline. These companies get paid for transporting energy, not for oil prices going up or down. That means much smoother performance, especially during market turbulence. Investors like its stability, lower volatility, and income. And this is best for conservative investors, retirees, and long-term TFSA users. So here is a quick recap. Which ETF should you choose? If you want the whole sector, then XEG or HXE. If you want balanced exposure, then ZEO or NRGY. Want stability and lower risk? Then PPLN. Do you want a monthly income? Then NRGY. And if you want maximum simplicity, then XEG. With oil demand remaining strong worldwide and Canada holding some of the largest reserves on the planet, these ETFs give you exposure to one of the country's most powerful economic engines. Whether you want growth, stability, or monthly dividends, there's an ETF here that fits your strategy.